What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol TWTR for Twitter Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, we have the 30-minute intraday time frame. First things first, this is a new ticker to the channel, so we'll start by giving ourselves a daily roadmap, just coming in and noting obvious areas of support and resistance. Then we'll talk more nuance when we drill down into the 30-minute intraday time frame. So here as resistance, certainly, and then up here as well, sort of the top end of this range without cherry picking too many of these upper wicks from in here. I like that at 70.76. What else am I seeing? Well, most notably, also a resistance trendline break, right? So if I come in from the highs and do something like this, what you'll note, and this can be adjusted actually just a hair. If we take this, you'll probably get a tighter fit if we do something like that, and that's much better. So 2 days worth of breakout here to the upside, and we'll see if we can get more continuation. But that being said, keep in mind the distance that we've already traveled here inside of Twitter. It wouldn't be unreasonable at this point in time for a small day of consolidation, a digestion day, something that gives the buyers a chance to catch their breath before the next move higher potentially into that 70.76 area. So keep that in mind as we trade into the remainder of this week and early parts of next week. Zooming in on the 30-minute intraday perspective to take a look at how this action actually unfolded, let's look through the lens of Fibonacci first. So from low to high of the first initial drive higher, certainly respected the 38.2. We'll go on up to the next one, essentially just the high of the day. And basically any consolidation that happens here does want to respect the 65.75 mark. So we'll go ahead and throw that on with a regular level and then clean up our charts here. So we'll put that on. Let's do something like this, and that's going to give us some areas to watch out for. So looking at the daily to sort of illustrate that again, maybe a healthy period of consolidation happens like this, a nice little resting bar. It could look like a hammer. It could look like an inverted hammer. There's a number of ways in terms of structure on how that might unfold, but we're really looking for 65.75 to hold in the most bullish outcome here in terms of consolidation. The next most bullish would obviously just be 65, the nice round number, and kind of breakout point from in here. That might look something like this, right? So those are the two main areas to watch for healthy consolidation, and then obviously taking the break up and over 67 to get into that next overhead resistance at 70.76. To the downside, taking out this 65 area, that's kind of the line in the sand. If we do take it out, again, I do think there could be a retracement lower into this move. And again, I don't exactly know where it might bottom out, but there's really no structure, right, until we come back down into this 61.60 area. So please play that with caution here. Earnings are a little bit further out, not a huge concern just yet, but something that is going to be coming up on the horizons. So those are my thoughts here inside of Twitter. If you enjoyed the video or learned anything new today, definitely let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.